Welcome to Stock Informer for You. The noise in the market is loud, but we prefer to let the data do the talking. Think of Eicher Motors, and your mind immediately pictures the iconic thump of a Royal Enfield. But if you think this company is just a motorcycle brand, you are missing out on one of the most brilliant compounding engines in stock market history. Right now, Eicher Motors is playing a massive dual game, dominating premium retail bikes on one side and quietly powering India's core infrastructure boom on the other. With its stock trading at over 7,100 rupees, record-breaking June sales numbers fresh off the press, and its first ever futuristic luxury EV hitting the asphalt, the big question is Eicher Motors still a buy, or has the valuation become way too heavy to carry? Let's find out. The dual engine numbers. Let's look under the hood at their financial engine. Eicher Motors wrapped up its full fiscal year on an absolute high. Consolidated revenue crossed a massive 23,408 crore rupees, a whopping 24% jump year on year. And net profits, they surged more than 16% to land at 5,515 crore rupees. How did they pull this off? It's their dual-engine business model. Engine number one, Royal Enfield. They just hit their highest ever annual sales volume, crossing 1.22 million motorcycles globally. Despite premium threats from the likes of Triumph and Harley-Davidson, Royal Enfield fiercely guards its turf with a stunning 87% market share in the 200 cubic centimeters plus category. And engine number two, VECV, their commercial vehicle joint venture with Volvo. For the first time in history, they crossed the monumental milestone of 100,000 trucks and buses sold in a single year. The June sales surprise. The brand new June monthly sales data has completely electrified the street. The commercial vehicle division smashed institutional expectations, recording a giant 29.3% volume surge with over 9,500 units sold. On the motorcycle front, total monthly sales skyrocketed 27% year-on-year to 1.14 lakh units. And look at this. Social media is currently buzzing because customer deliveries have officially begun for their highly anticipated luxury electric bike, the Flying Flea C6. It marks their official, long-awaited entry into the clean energy motorcycle category, setting up a city-by-city rollout plan that has the entire market watching. The future map and the risks. So, what does the future look like? Management isn't lifting their foot off the gas. They are aggressively pushing to touch a total production capacity of 2 million units by late 2027. This includes an incredibly ambitious 2,500 crore rupees greenfield mega plant in Tirupati, Andhra Pradesh, which will act as their strategic export hub. They are also rolling out a massive product pipeline featuring 18 total launches and platform updates, including a heavier flagship 750cc twin-cylinder platform to take on global heavyweights in international markets. But it's not entirely a smooth ride. There are two major speed bumps investors need to monitor closely. First, look at the volume mix. While domestic growth is exploding, international exports dipped by 20% this past quarter due to global macroeconomic pressures. Second, raw material inflation is creeping up by about 3.5%. Management has already countered this with a 1.75% price hike in April to protect their coveted 24 to 25% operating margins, but any aggressive price wars from rivals could put those margins to the test. Valuation and the verdict. This brings us to the ultimate question. Valuation. At roughly 7,100 rupees per share, Eicher Motors trades at a trailing price-to-earnings multiple of approximately 35.5 times. Now, compared to the broader auto sector average of 24 times, yes, it commands a premium. But remember, you are paying a premium for a virtually debt-free balance sheet, an outstanding 22% return on equity, and an asset that acts more like an aspirational lifestyle brand than a standard commuter utility stock. Top global brokerages maintain strong targets ranging between 7,580 rupees and 8,550 rupees. Pricing in steady, highly predictable compounding over the next few years. If you want explosive, speculative 100% gains overnight, Eicher might not be your stock. But if you want a robust, clean corporate machine riding the waves of both premium consumerism and heavy infrastructure growth, Eicher Motors is incredibly tough to ignore. What do you think? Are you buying Eicher Motors at current levels, or are you waiting for a dip? Let me know in the comments below. Don't forget to hit like, subscribe, and turn on notifications. See you in the next analysis.